What's up? It is Mitchell J, the Scaredy Cat Guide, and Bitcoin giving us a dead cat bounce. That is a trading term that basically references a bounce in an expected area like a support that essentially really is just a fake out. It's almost just like a reprieve from the selling, a moment to work off the oversold condition, and then proceed lower. So we got a modest weak little bounce in Bitcoin, um, off of the prior low. So obviously, there was this aggressive spike, reversal candle rally. We came back down. We didn't get down to the intraday lows, but we, got into the lows, the opening, closing lows, and inside this intraday move. And then let's zoom in a little here. Got, a quasi reversal candle and then moved up a couple days, and we are already giving it back, and we are coming to test the intraday low of this. I don't even want to say prior bottom because it's not really a bottom, since this really wasn't much of a top. So yeah, little kind of dead cat bounce, not even much of a bounce. So the price action is still obviously weak. A positive note is we're starting to get stretched on the downside away from the 200-day moving average. So at some point, we'll see a regression back to that. But who knows how long and how far, because the bottom line is if you look on the opposite end, I mean, we would pull away, pull back, pull away, pull back, pull away, pull back some, and then boom. So obviously, I mean, based on that, we could go all the way down to $3,000, no problem, before rallying, so to speak, to maybe come back towards the 200-day moving average. So again, that's why I don't use it as a trading principle. I use it as a guide and as a support resistance level, since it's a widely followed average. Outside of that, I'm looking at trend lines and support and resistance lines. Like I say, keep it simple. Work the price chart. That's where everything starts and ends. All secondary indicators are based pretty much off of price and volume. So anyway, I'm looking at the Bitcoin chart, and obviously we broke this long-term uptrend. We didn't even test it. We bounced a little bit, came short of even testing where that line would have been, about here, 78, 79. Just eyeballing, I just see this. I see this down channel. Like we've essentially fallen into another descending channel. So, I could actually draw a line. In fact, you know what? Let's do it. So top, pull back, hit its head, pull back, little tiny bounce, where it fell, boom. So I can almost use this line as a guideline. And this is actually decently steep, pretty aggressive. So I don't know. I'd be surprised if it can't rally out of this, but I'll use it as a reference point to guide me. So anyway, we're back at looking at basically, 5,900, $6,000 as the possible next support, next bottom, and we'll see what happens when we get there. I would like to think that that's it because, again, full round trip from when we basically broke out and went parabolic. I mean, it was like, here we go, good appreciation, new investment, people are excited, and then all of a sudden, oh, crazy town. So we basically returned all of Crazy Town. Essentially, when we are at 5,900, that pretty much gives back all of Crazy Town. So we'll see. We will see if Bitcoin can find footing at 6K. Price action just looks weak as hell right now. So I'm not making any expectations, or having any, I should say. I'm just going to wait and act accordingly. So that's the deal. Let's take a look at Ethereum real quick. Ethereum, same thing, tiny little bounce, and look where it struggled with this prior support resistance that it ended up crashing through. In addition to this trend line that it had long ago pulled away from. So same thing, came through, kind of failed below it. That's not positive at all. In fact, that makes me sad because now I'm thinking Ethereum could get down to like 285. You see where I got the hash line from the cursor. That looks like the most obvious next level of support area where price, either consolidated or bounced or hit its head. So again, like I said, support and resistance. It is one of the most basic things in charting and also the most important, and is video number one in the Scaredy Cat Guide crypto course. Anyway, I prefer not to see Ethereum go to 285, but I also will be prepared for if it does. So upside, we need to basically get above this resistance back into this prior range. So we want to basically be 405, 410 plus. Otherwise, we're looking at downside of 285. Good times. I hope everyone is getting the idea here. Find prior price points that you can use as targets and then set up appropriate risk reward scenarios. Remember, asymmetrical risk. You want to be able to make many times what you're possibly able to lose. More profit than you're risking. That is the scenario you want, because you're not going to be right every time. Hell, you're going to be lucky if you're right half the time. Yes, it's true. Don't let anyone lie to you. Anyone can go on streaks. You can win a bunch of trades in a row, but you are going to eventually average out and you will have a string of losers. Asymmetrical risk. Anyway, that is really it. I'm not really super excited by the crypto news over the last day or two. Nothing flashy, so we'll see what happens. We'll see if we get some more price movement. It has been choppy and slow. Anyway, I'll leave some links in the show notes as usual. I'll catch you guys later.